for joining us today at Oklahoma Central Credit Union on our first time auto buyer program. We're very excited about this webinar today because we are actually relaunching our first time auto buyer program today. And we have all kinds of goodies in store for our members. And if you're not a member of Oklahoma Central Credit Union and you like what you hear today, please join our credit union. We're here and we're happy to help. Today, I have Kevin Carter, our Director of Lending, with me. And he is going to be sharing some tips that we can know for auto buying and different things like that to help save us some money. And we also have our Director of Community Involvement with Leah Bowles. She is answering our questions today. So if you have any questions at all, please don't hesitate to go ahead and put those down there in the question box. We'll be glad to answer. If we do not address your question during the webinar, we definitely will be sending you an email with what the answer is to it. And we're so happy that you decided to join us today. How are you today, Kevin?
I'm doing great. It's beautiful outside, so.
Yes, it's finally some nice summertime weather today.
I know, I'm ready to get on my boat.
Definitely. So, Kevin, what would you say is the most important thing about the car buying process?
You know, I would say the most important thing is probably preparation. I think preparation is an essential part of the car buying process. You should have a very good understanding of what you want, what you can afford, and also we want to make sure we don't exclude the extra cost of owning a car, like the insurance and gas that goes into the preparation of that. Preparation keeps you from going overboard or being taken advantage of at the dealership once you get there. I'd say the second most important part of the car buying process would probably be don't settle for what you don't want. We got to remember this is a long-term investment, and we want to make sure we're very happy with the purchase that we make, especially if that purchase falls within your price and your payment range. You don't want to have something on a loan for a long time that you're not happy with.
Definitely. That is some really good advice. Thank you for that. Now,
You're welcome.
how is it, Kevin, that we can figure out if I was to decide I'm going to go ahead and buy a new car next month, how can I go about figuring out how much is it that I would be able to afford?
That's an excellent question, actually. Most people, they just go out and look at cars and they say, I think I can afford about this, and they really don't have any of that research done before they go to the banker or the member service representative and find out, what the credit union or the financial institution thinks you can afford. I'm actually going to pull up a slide, which you should be able to see the purple screen right now. The first part of buying a car is knowing your limits. Some people like to know the amount to spend, while others want to know what payment they can afford. Now, the school of thought here, it differs on this question, but I really like the Edmunds.com view, which is that your car payment should be no more than 10% of your monthly take-home pay. So for example, on the slide here, if you have a used auto, and let's say you take home about $4,000 a month, if you times that times 10% for a used car, $400 would probably be the max payment range that you want to stay in. Now, if it's a new vehicle, they do tell us to raise that a little bit. It would be 15%. So again, in the example, take home's $4,000 at 15%, you're looking about a max payment of $600. Now, to get the overall amount, I use the 72-month term. And the reason why I use 72-month as my baseline for my term is because it's a great example of making the payment long enough to where it's affordable, but it's short enough to keep your depreciation on the vehicle from running out your balance. So for the maximum purchase amount, we'll just say the used car is what we're going to talk about. In the example here, you'll see that it says $400 is your monthly payment, which we got from the figures up above. We times that times 72 months. That means we should be able to afford something around $28,800. This gives you a very good baseline as far as the total amount that you can purchase, depending on where the interest rate is. Now, like I said earlier, we don't want to forget the cost of owning a car. And so for that, what we do is we take our monthly income, again, $4,000, we times it times 7%, which is $280. So what we're saying is on a used car, we should be able to spend about $28,800 with a payment on the loan of $400. And between the fuel efficiency of the car and the insurance of the car, we want to keep that around $280. This basically gives you an idea of the amount you should use as you research online, go to multiple dealership websites, and try to see what's in your price range.
Okay. So now with that, how would I go about to get a loan?
The best option I can give you is to contact your financial institution and apply to obtain a pre-approval. If you have a pre-approval, then when you hit your dealerships, you have bargaining power. And you have bargaining power because when you hit that dealership knows you're there to A, purchase a vehicle, and second, you have the ability to purchase a vehicle, and you've already scoped that all out with your pre-approval. When you're applying for your loan, you need to make sure you know the following information. Your gross income. Now, this is the income before any taxes or before any insurances are deducted. So you want to know what your gross income is, and you want to make sure you have at least your last 2 pay stubs ready to go for your member service rep. The payment amount you want to be around, that would be the second thing you want to make sure you tell them. And I always, when I give a payment amount to my credit union or to us, I always give them a range of about $50. So in our example, we are looking at a $400 max payment on a used vehicle. So I would put that between $400 and $450. And then next, do you want to purchase a used car or do you want to purchase a new car? Once they have all that information, they'll be able to make a decision on the loan and also structure the loan to fit within your budget. Another thing that a lot of people forget is that you should ask your credit union if they offer extended warranties or gaps. And just FYI, we do offer those here at Oklahoma Central Credit Union. Just so you know what they are, an extended warranty is a product that covers repair after a vehicle's factory warranty has expired. And your gap insurance, it's a optional car insurance that you purchase that helps pay the difference between what your car's actual cash value is and what the amount is you owe. So if you do have it where it's totaled or if it's stolen versus what it's worth versus what you owe, this insurance basically fills that gap for you. Now, once you have them, you have a baseline of the expense of these products. Though these products might be more expensive at the dealership when you purchase them, you've got to remember they probably are more expensive, but they may have some better options, terms, mileage caps within the product. But at least this will give you an idea of the cost of gap and extended warranty, and you have a price that you can negotiate these items with. And you do, like I said, want to shop once you get your loan pre-approval and you're at the dealership, and we'll talk about this a little bit later, but you do want to shop for financing with the dealership. They have many financial institutions they deal with. They might be able to get you a better rate. However, let's just talk about it here. This can cause your score to drop. And so, which you don't want to have happen if the dealership pulls your credit score too many times. And so if you do shop at the dealership, the key is to shop quickly and ask them to look at only 2 options. Any other inquiries made on your credit report may lower your score. And so, and if they do too many at one time, it could drop it quickly and hinder your shopping experience. And, you know, we don't want them what they in the car world call shotgunning your credit. If this happens, though, don't fear. You just need to reach out via online to your TransUnion, Equifax, and Experian websites, and you can go in there and do a dispute, let them know you're car shopping, and they can take those multiple inquiries in that report within that 30-day window, and they can consolidate them into one inquiry as far as the credit score reporting purposes. You'll still see them on there, but as far as your score, it won't be affected as bad once they complete the research.
Kevin, thank you so much for giving us that bit of advice on it. That is a question too that I get a lot out in the community asking when they're car shopping about, well, what about my credit being pulled and how many times will it count? So thank you so much for covering that.
You're welcome.
So Danielle, how long should a loan be? I know a minute ago you had said you like to do 72 months for those reasons. Just depending on it, how long should some of our members look at to do their auto loan for?
A little longer than what they probably said, maybe even 5-10 years ago. Because of the higher prices of autos right now, more and more people are taking out a longer term to allow for a lower monthly payment. But that's not always the best idea. A longer loan, you got to remember, a longer loan will lower your monthly payment, but you're going to pay more in finance charges, and it's also going to take you longer to gain equity in the vehicle. These days, 72-month and 84-month loans are increasingly common, but my recommendation is 60 to 66 months or lower is the best, and that's what they would probably told you 5 years ago, and I still think that's very good, especially if you're financing a used car. But you need to ask your member representative at the credit union who's helping you what the payments are on a 60-month loan and also a 72-month loan. This lets you know the amount you can spend monthly on a conservative 60-month term loan, and also if you need a lower payment, a 72-month loan. Now, if you cannot find a vehicle during your online search within the purchase price you want, you also want to probably then check out an 84-month loan term payment. Though
Okay.
you'll stay ahead, though you're on an 84-month, you're not going to stay ahead of the depreciation. You can afford more vehicle if you need to shop again later on, or when you need to shop. The only thing I would say here is, and let me explain what depreciation is. To clarify, depreciation is a reduction in the value of an asset over time, and it's probably, just due to basic wear and tear. We most likely have heard of this being called being upside down on a vehicle. That means the car is not worth what you owe on it. And a shorter term on your loan will balance that risk of your vehicle being upside down when you're ready to trade it in. However, like I said, vehicles are made better than they were in the past, and they are more expensive. So an 84-month term is not uncommon due to the life expectancy of the vehicle and the price of the vehicle today if you really don't plan on trading it in within the next probably 3 to 4 years.
Okay, thank you for that. Now, what about a down payment? How can we go about that?
The dreaded down payment, that's always a concern, especially for a first-time car buyer. Ideally, you want to try to put 20% down if you're buying a new car. If it's a used car, 10% down. This usually will offset the initial depreciation that happens when you drive off the lot and start enjoying your car at the beginning. It may not be feasible for you today with vehicles price increase to put a down payment of that much. And if you do need to make a smaller payment, in that case, my advice is to put down as much as possible without dipping into your emergency savings. And if you put down less, you always have that gap insurance to help close the gap between what your car's worth and then what your balance is. Should it be totaled or stolen? And so with adequate down payment and keeping your term on your loan lower, you should be able to protect yourself from escalated depreciation.
Okay. Now, what about they have leasing vehicles? Should I lease a vehicle?
Um, Leasing is a very good option. I will tell you, most first-time auto buyers, if you're first time ever buying a car, usually you have limited credit, and so leasing may not be an option. But for your folks that have bought a couple of cars, leasing is definitely an option. Leasing may be compelling option for someone if you're into the latest tech and luxury. Suppose that a $400 monthly payment is what's comfortable for you. If you're buying that, you might get a sedan, a mainstream SUV or sedan. But if you're leasing, you can choose from a variety of maybe luxury models. Of course, you don't own that car if you lease. If you, and if you skip, by leasing, you'll be able to skip, which is nice, the usual maintenance and repairs, paying for only routine procedures like changing oils and tires. But there's no objective answer here to whether buying or leasing is better. But for those who don't mind always having a car payment, it's easy to see why leasing holds an appeal. But like I said at the beginning of the question here, which is a great question, most of our first-time auto buyers doing it for the first time, they probably won't be able to take advantage of leasing. And I tell you, at that point, with the questions you've asked so far, you've looked at vehicles online, talked to your financial institution, figured out the payment that you want, and you know the amount that you need to stay within to keep your payments where you need to. And you've researched the vehicles online, you're pretty much ready to go to the lot at that point.
Okay, and then this is something you did hit on it some with on when dealerships will pull our credit and how to do it. So how would you advise? Do you think that it is better to let the dealership go ahead and pull your credit, or do you think that's better to get a pre-approval before you even go car shopping?
Right, and this is why I hit this on, earlier when we were talking about the pre-approval and what it does for you. But I did want to come back down to it later and talk about it again. Though you are pre-approved, it might still be necessary, and I've already told you how it could be valuable to you, but it might be necessary for the dealership to pull your credit. And the reason why I say that is, I want to say here that you don't want the dealership to pull your credit until you've actually picked out the vehicle you're interested in purchasing. Okay, so you want to wait till you're actually ready to buy the car. There's no real reason for a dealership to pull your credit before you actually know this is the car I want. However, it is valuable on finding rates and terms that are comparable to what you were pre-approved for, but it may be necessary once you pick out your vehicle for the dealership to pull your credit. There are specific laws and regulations that the dealerships have to abide by. And some dealerships, what they do, they use your credit report to fulfill those. But again, steer away from allowing them to pull your credit until you're ready to negotiate. And then, if you do, just ask them to pull it a couple times. They have multiple financial institutions they work with, and they may be able to give you a better look at your loan. And it's definitely worth a look if they decide to do that.
Perfect. Well, so now, Kevin, since here at Oklahoma Central, we revamped and we're relaunching starting today our first time auto buyer program. What are some of the big wins that you would like for anyone that's on the webinar right now, or for those that come back and watch it at a later time, the takeaways that you would like for them to know about our new revamped first time auto buyer program?
Yeah, excellent. And this was an excellent time for this webinar. So I was very excited that we did both on the same day. If you're a first-time auto buyer, our first-time auto buyer program is for, and it's been tailored to people, members that have never bought a vehicle ever. They basically never had credit for a vehicle. And so one of the things I would say as far as the program is you cannot have a car loan on your credit report to qualify. You have to, it is for our younger folks, so I believe the age that it's under is 35. And you can talk to your member service representative on that, and they'll be able to tell you. But it's for the younger demographic that's never bought a vehicle. Now, the great thing about our car first-time auto buyer program is we do put in extra things like job times. A lot of times for our younger folks haven't been on their job that long, or they've been in college. So we do lower the job requirements, and we also include the time they were in college to offset some of that job time that we try to stay under. But the biggest thing I can tell you is the interest rate. the interest rate on our first time auto buyer program, we've made it to where our younger members can afford a car. They'll be able to get the experience of buying a car and our expertise, and they'll be able to afford a bigger payment based on the interest rate that we give them, how we styled our car program. But yeah, call us, talk to a member if you're looking to buy a car, and ask for the qualifications and apply for it.
All right, let me ask you something. Like my youngest is about to graduate, so she's moving home next weekend.
Yes,
Eventually, she is going to need a new car. She got a car before she went away to college. She's been driving out of state back and forth. So this would be a product that could probably really suit her needs since she's worked and went to school then.
yeah, it would be an excellent car for her needs. Yeah, if she has employment and she's in school and everything like that, it should be perfect for her. The one thing I would say is it allows mom not to have to be on the car loan with her, and that's excellent, because it doesn't go against your credit if something goes wrong. This is the kid being able to, and I say kid, I'm a little older, but the young person being able to afford a car on their own and be able to get some expertise from their banker and also take some classes on car ownership, to where they know what they're doing and how they're doing it, and they don't need mom and dad to be on the loan. So this would be excellent for them.
That's fantastic. And then I did have a quick question. Do we have here at the, I know we offer so many different products with everything. We can also do with our vendors that we do insurance with, they also offer auto insurance for our members too, don't they?
They do, yes. Yeah, if you are interested in looking up the insurance quotes through the credit union, you can call a member representative, and they can go in and they'll be able to help you with that. And I believe there may be a link online, but our member representatives can confirm that for me.
Fantastic. You mentioned just now a link online for that. Is there a way for people to be able to go online and apply for our first time auto buyer program so that they don't
Um,
necessarily have to come into a branch?
They can go in and apply for a first-time auto buyer program, and they can put in the comments of the application that they're looking for the first-time auto buyer program. But what I will tell you is if you do online application and you do not put that you're interested in that program, our member service reps, they're very well experienced. They'll be able to look at that, and they will be able to say they meet this set of criteria. And I'll be honest with you, they'll probably automatically just say, hey, you're an excellent person for our first time auto buyer program. It's going to offer you a cheaper rate. Why don't we talk about that route?
I do. I have another daughter of mine several years ago actually did our first time homebuyer program.
Oh,
So
nice.
that was we did not even know she was doing it. She actually called me here at work and said, I just got approved for Oklahoma Central. I'm getting a new car. So,
Yeah, there you go.
and she even said how easy it was, how simple it was. So those are things that are really exciting, especially nowadays where we value our time a lot more.
Well, and it gets a young person involved in the credit union very early, where a lot of times they didn't even know we had that option.
Well, Kevin, as we're wrapping up today, I want to say thank you so much for joining me. But do you have any last minute advice to give anyone out there that may be headed out to the car lots to do some car shopping or jumping online to do some?
I first off, thank you for having me and allowing me to do this with you guys. My final thoughts would be strategic in how your credit is pooled, to save from point deductions on your credit report. Number two, know what you can afford, and try your best to stick with that budget. Number three, don't allow the dealer to sell you something you don't want or that doesn't fit into your budget or your lifestyle. Four, know that any extras you want on the vehicle, it's going to cost you. They don't give things away for free. Number five, know that if it's a upgrade from your current vehicle, it may cost more on insurance, so always price your insurance out. Six, if gas mileage is higher than your current vehicle, make sure you take that into consideration as far as the budgeting goes. And then finally, just know the dealership wants to sell you the vehicle. They want to sell it to you at the highest price they can because they got to make the profit with the most additions. So they do that because they want to make the most money. But be prepared, to negotiate, make your decision based on your needs, and know your wants. And know your wants. Don't get into something because of peer pressure. Most dealerships, they're just there to help folks, and they usually listen to you and they listen to your needs and they recommend stuff based on that. But if you do happen to get somewhere where it's a little where they're pushing things, you're in charge of this. It's your car, it's your purchase. Be prepared to negotiate. And no matter what, Oklahoma Central Credit Union and our member representatives and my lending team, we're here to back you up. We're here to help you, and we can help you every single step of the way.
Thank you so much, Kevin. I really appreciate that. For those that are viewing our webinar, or if you're watching it after the webinar is already aired, if you have any questions on any of the questions that were asked or anything, please do not hesitate to reach out and ask us any questions at all. We're happy to answer it. We'll go ahead and keep the chat window open for the next few minutes if anyone does have any questions that you want to send off. And thank you so much for joining us today.
Thank you, guys.
Thank you again for joining us today for our first time auto buyer program webinar.